Good morning everybody, welcome to Stockradar Stocks on the Move for another week. It's the 30th of 9th, 2022. My name is Richard Lee and I made the stockradar.com.au website for you. Okay, my favourite place is the ocean. I find it very soothing, I find it very energetic. I really love to be down there. It creates my sort of happy place. So I just want to talk to you a little bit about that today and how I relate it to the stock market. As I said, my favourite place is the ocean, which is on the start page this week. It is free, full of energy, it is wild, it is uncontrollable. The anomaly here is that it is also very calming and very soothing. We can be constantly mesmerised by its force and its seemingly uncontrolled freedom. But by watching the waves crash in and flow out repeatedly, there is a controlled, repetitive nature to it, and it reminds me very much of the stock market. The stock market's ebbs and flows in momentum, the ins and outs of momentum, the ins and outs of the waves. It never really changes, and in the end it is just another force of human nature. Okay, so it's an interesting thing when you think about how the markets work and how we work in our minds. It's very, very different. So we need to sort of try and respect this as to how it works. Anyway, so we're having a bit of a relief day today, okay, which is a good thing. We're all a bit happy, prices are a bit better, but really one day doesn't make a market, okay? So we need validation for all this sort of thing. We need substantiation to use by a step-by-step evaluation of the waves of bullish and bearish momentum that appear in the stock market. And we do this by using our trade plan process, okay? So signs of demand and buying support is the greatest starting point for a change in momentum. So I'm going to focus on that today because I'm not really interested in a lot of other things. I really want to find, the market's coming down, there's fear, there's, everyone thinks it's bad, it can't go up again, but it can do, but we need to find signs of support and we need to validate these moves so we're sure what we're seeing, or we're putting the odds in our favour as best we can that the market is going to turn or a stock is going to turn. Okay, so by respecting our trend intensity rating system, excuse me, over the last 12 months, we have preserved a lot of capital and stayed primarily neutral, which sort of seems crazy in this world. But the world has been crazy and it's been very difficult to understand what's been going on. But we just really need to make sure that our capital is safe most of the time. So this is the key to being focused on the current market condition and is also preparing us for the next upswing with our capital intact, okay? So that's a very important aspect of it. In this week's trading tactics, we'll have a look at our tracking of the stock pick count against the ASX 200 and see what it tells us. It has been a very reliable precursor to market behaviour in the past. Okay, so we're in a difficult time at the moment. We just need to really respect that and make sure our capital is intact. Okay, enough chat about that. Okay, so our format for today, as usual, is go to the background of the overseas markets, focusing on the ASX 200 and then stock picks. I'm not a top-down analyst, but it just gives you a bit of background as to what's going on. Okay, as risk stays high, common sense sells, stay still and preserve your capital. This is not a time to be reckless. I can reinforce that enough because I know people want to look at stuff, but there's just not a lot coming up on my scans at the moment, which is fairly frustrating. Okay, so let's just go to the overseas markets. Let me find my cursor. Here we are. Okay, Dow Jones. We see the Dow Jones. We had a great rally last night, 500 points up. Really hasn't really put a dent in anything at the moment, so don't get too excited about it. We're at support or just below it, but the downtrend has been in force for over a year now, and it's really not looking that flash at the moment. We need a week or two to see if this support holds and some sort of rally, and then we've got to find out that it's got to get above the moving average, the downtrend line. So we've got a long way to go as yet for us. Okay, so that's the Dow Jones, the Nasdaq. It's over here somewhere. Okay, let's just find that. Here we go. Okay, so the Nasdaq, it's had support as well. It's had a rally today, which has been good, but there's not a lot happening there. The market, there's still a lot of selling here. We're really in a neutral zone at the moment on the Nasdaq. Not a lot to say there. And again, if you look at the S&P 500 and even the Russell 2000, there's not a lot to hope for there. So Copper, the commodities are still looking pretty weak. Copper's going down. It's there's a fairly high activity here at the moment. It's above support. It's everything's bounced a little bit last night. Copper, crude, everything's bounced a little bit tonight. But don't hang your hat on it. Gold, as we know, is looking very weak at the mercy of the US dollar. It's going down further. Our gold stocks are still going down, so we're not worried about that there. Brent crude's an interesting one. It's come off a bit. We've seen a bit of selling here recently, which is sort of we haven't seen that before, so the selling is a little bit of a worry, but we are heading to that northern summer again, which I've told you before, and often it's a good sign of support for crude. But we'll have to wait and see how it performs, because the trend is down at the moment. It needs to get through a bit of areas here before it's going to see a rally. My feeling is that this is a correction to the up move, but we'll have to wait and see, as I said, for the moment. So we've got negative momentum here. It's below the average, so the trend intensity rating would be probably about -8 or 9 on this at the moment. So not too hopeful at this stage. Okay, so let's get into the ASX 200, which is our market. Now we're starting to get into some detail. Okay, so our market, it looks down. It's hit that support bang on, and we're going to see a rally today. Fine. One day, we'll wait and see where the week finishes. We've got Friday to come yet. It may hold this week, which is good, but again, we've got all these levels here above it that can stop a rally, which it has stopped before. So lots of work to be done yet, but preferably I like to look at stock picks individually, and we'll have a look at those in a second. Before we do, I'll just go to the stock pick count. The stock pick update, where our stock pick portfolio, including ETFs, everything is down 2 to 22 of 183. Okay, the stock picks are actually down to only 21 stocks of 162 covered, one ETF of 21 covered. So all fairly negative at the moment. Conservative portfolio is down 1 to 3 of 20. Very rarely do I see it that low, and that should be a bit lower than 20%, but it's still weak. And also the Energizer portfolios have both come off the top a little bit. Still at 80% equity, so we still hold Whitehavens and Woodsides and stuff in there. So there's still some stocks going up, computer share, but not a lot at the moment. I can't really find much else, so that's why I'm just going to focus on some supports today. So let's go to some stocks and have a look at them. The scans, I said, aren't revealing a lot at the moment, but there are a few nearing support. Now, support is only support if it holds a market. So as we approach it, hopefully it will hold, and then we need evidence of some buying to persist. But it's our first port of call for evaluating our opportunities. It's where we start. Stocks will turn at some stage, and through our patience and persistence, we will be ready, because we are in a good position, cashed up to take a hold of some of these rallies if and when they occur. Okay, so first off, I want to go through just a few stocks of support. I haven't really got much on the charts today, because I don't really want to focus you on little bits of detail. It's really the big picture stuff at the moment I really want to have a look at. So if I look at the one first stock is Elders. It came off, it finished its rally a while ago. We got out of it. It's now come back to around this $11 level, which is showing signs of support. We've had a bit of buying here, but still we're below the average, and still momentum is weak. So we're sort of pretty well neutral on trend intensity basis there. I haven't got anything on here apart from one line, okay, and that's what I'm focusing on at the moment. If this makes a lower high, that's not such a good sign, and you'll see a couple of the other ones are a bit similar to that. But we've seen some good buying here, and that's a good sign. That's what I want to see, okay, but it's not enough for me to be buying at this stage. Okay, Metcash, another one which has done so well against the awesome forces of Woolworths and Coles. Let's wait for this to come up, okay. So Metcash has been, it's been rallying above 380 for a while. We had 1, 2, 3, 4 spots here where it's come back to and held, but this time, at this stage, we have a lower high, which is probably not really what we want to see, which does suggest if it makes a new low here, we have a new downtrend in place. So we have to watch Metcash, but, stranger things have happened. Because I'm a long-only trader, the bias is always up in the stock market, okay? So I'm not that concerned about this at this stage. I'm quite happy to look at this as a buying opportunity, but once it gets down to the support, I then need that other areas. I need the average broken and things like that to really tell me it is going to go back up again. So it's a bit further down the track on a lot of these stocks to go yet. ALQ is another one. During COVID, it benefited quite a lot. We saw a good rally, but it really has struggled up here. Big distribution sort of pattern in here. It's come down to the support level, the old high. It rallied around here for a bit, traded around here for a bit. It's come back to support it here at this stage. It's rallied. It hasn't made a new high. It's a lower high, which is not such a good sign. Really puts pressure on this point here. So it's still worth watching. Keep an eye on it. It hasn't broken yet, okay? Insignia is a long-term one, which we've looked at before, but I like this one. The only reason being, we are at a long-term support area for this one. This last rally attracted some good volume, which was interesting. We have got a bit of selling here, but things are turning. It did get above the average. Momentum is heading back towards neutral, so the bottom may well be in place, and I think downside risk is probably pretty low on a stock like this. Argo Investments, an interesting stock. It's come back to an old high here. There's a few little points here of support, but again, we've got this lower high here, and we're now seeing some heavy volume pushing into this support. If the support held, that would be a very good sign against this volume of selling here. So certainly worth watching, but again, a lot of work to be done before it actually goes up. There are other stocks that are going up, mainly for Stockradar members, but I just want to focus you on what I do and how I work, so you can get a good idea of whether you might want to subscribe or not, because it's important you understand how and what I do, because in the end what I want to do is be able to teach you how to do it, primarily yourself. Okay, so the ASX is another stock. Every stock is different, and the ASX has just traded in this range for about 4 years, up and down, and you can see what's happened here. This actually looked pretty good, this rally here. It was a good volume here. It got above the average. Momentum is starting to crack above here. We didn't get through here, which is the key barometer for me. And strangely enough, if you anticipated, it would have been a real scare, because this has just come down on enormous volume, straight back down to the low of the range. So what was nearly $90 a few weeks ago is now down around 70. So the stock market is a very funny place, but just we've got to respect what it does over and over again, because it can be a real lesson teacher for you. Okay, so that's the ASX. Wouldn't touch it with a barge pole until I see some support at this level down here at S1. Okay, Rio Tinto and the miners. Well, I have a couple of miners in there, Alchem, Woodside, a couple of them there, but not many. I certainly don't hold BHP, I certainly don't hold Rio, much as I'd love to, because they're great stocks. But this has come down. It's come down from over $130. It is now down around $90, and at support, we've got a bit of activity here, which is good. This is still weak. It's below the average. So Rio, at support, we watch it. It's the first step. Only the first step. So it's a long road before we get a reversal. But once we do get the reversal, and it's validated, it's substantiated, then we're really confident that we can get to see a good rally, because they will rally at some stage, and they'll rally strongly. And we just want to try and get it on the right time. Okay, so that's Rio. Okay, Auckland International Airport, another one. I don't know who's interested in this one, but it's an interesting situation where we've got this market. It's had a rally. It tried to make a new high here. Didn't really go on. We've got a big support level across here, about 640, 650. But we've got these lower highs pushing into this support area here. Got a bit of volume here, and momentum starting to teeter off. So it'll be an interesting thing to see if this actually holds, because the pressure is certainly on the downside for the moment. So again, it may just fall through, and we might be right back to 450 in a few weeks. I don't know. But that's a support level, and I respect it for sure. Okay, on the other side of the coin, there's a few stocks that are being resilient, and some of the health stocks are there. I'm going to show you one today, which I think has been quite, we'd had a big thump down since September last year with the market. It came down from $40 to 28, which is a fairly heavy correction for ResMed. And it's now, interestingly enough, had a really good rally here, a really good volume. Momentum's come back up to neutral territory. So that's a good sign, but we're not carried away with it yet. We wait until we get a proper trend reversal. So what I want to see now is a correction back, which I'm seeing at the moment. It's come back nicely, so I've had a good correction here. It tried, didn't go through. Again, we didn't anticipate this one, luckily, and it's come back again. But the support is resilient. It's making a higher low at this stage, which is encouraging. We've had a bit of a selling hit here for whatever reason, so we just observe that, but it's only 1 week. It's the big picture we're looking at here, and we have a trend reversal pattern developing here, which is a good sign. This is above zero, we're above the average, so trend intensity rating is -3. If it pushed through $34 or just above there, then we have a trend reversal and we'll have a positive trend intensity rating. So there will be stocks that are starting to move off. Some stocks are still looking pretty bad. So just, you got to focus on what you see, not what you hope for. And another one is focusing on what you see, not what you hope for, is Qantas. Everybody loves to hate Qantas at the moment because, I guess it's association with Jetstar, and they haven't been doing too well with all their cancellations and things like that, which has been a bit of a sad story for a lot of people, I know. However, people are buying the stock for whatever reason. Okay, it's been in this trading range for a couple of years, so until it breaks out of that, I'm not that interested. But we are getting some good support on this last rally. It got above the average. Momentum is nearly back, is pretty well back to neutral. So there's encouraging signs, but I really need this R1 to fall before we're going to look at the possibility of it moving to R2. But stranger things have happened, and we know when things are looking really bad, it's often when the turn comes. So I'm not going to tell you what I think about Qantas. I don't like them very much because Mr. Joyce gets paid an awful lot of money. There's an awful lot of people not doing too well on the flights. But, you know, if people are buying the stock and this tells me it's going up, then I will follow it. Okay? Wait till R1 drops and we'll see what happens. Okay, Nanosonics is one we follow. Again, it's about not getting caught up in these rallies, which look awfully good. We saw ResMed before. We've got to be patient with these moves. It's a start. We look for support to start. We look for some volume, and we get some encouragement from a break of a moving average, but we really need a proper reversal pattern rather than just a straight up, because we know that reversals will happen for most cases. And here we're seeing a nice deep pullback. It's still above the low, so the trend reversal structure is still there. Now we're having some good selling here, which is putting pressure on it, but we're still above the low. If it started to turn from here, I'll be very encouraged, start to get above the average, and then it started to move through here. Then I have a good weekly substantiation of a trend reversal, not just a few week rally on an excitable volume. I have a good tested challenge, a selling challenge, and the buyers to come back in and support it above the low. This is the sort of thing that I really need to look for, and this is the sort of thing you need to look for as well. To be confident in what you're doing and really put those odds in your favour, because it's hard enough making money in the stock market without guessing and hoping all the time. Okay, so I'll just keep following this one, because you never know how it's going to develop, and it is at a long-term support zone down at S1 at $3, and it's holding above there, and that's a good sign. So we'll wait and see how that goes. The other one is a little like ICT, which I showed you last week. Just got a little bit of a boost, but it's only about one or two stocks that are going up in this world. You know, a couple of those energy and coal stocks, and iCollege, which is a small stock which I don't cover, but it's a little stock. I try to give my subscribers a little bit of a hint outside the stock that I cover, and this one has really done very, very well. And the volume is, you know, you can't argue with this sort of pattern. Volume, momentum, it's all great, so that's good. Okay, so that's enough of that sort of stuff for the moment. Okay, now what I really want to show you is that stock pick count. Now, this has been a really good, useful thing for me for a long time to try and give me an idea of what's happening, you know, what's going to happen or what is happening at the moment in the market. What's the breadth of it? What's the solidity of it? So it's like a risk barometer to me. So the stock pick count has actually been falling since September 2021. Okay, so we had a little bit of a top up here. It's coming down pretty quickly, and the market itself went sideways for a bit, then had a bit of a rally here, and nearly got up to take its highs out, but this just kept staying low. It was not a lot of stocks that drove this up, so that probably means this was driven by some higher cap stocks, whether it be BHP, the banks, whatever. That's probably what, and we've got to be very careful of that, because that's what drives this ASX 200. So the stock pick count has been very good. Now, that means we've been in a lot of cash over the last year, which has been a bit frustrating. We've had a few nibbles, we've had a few good stocks, computer shares and things, but generally we've been in cash. And although that may not be earning much, it is not shrinking. And that means that capital stays intact. All about preserving capital. So if you're preserving capital, that's good, because when the market does bottom and you've got your substantiated trend reversal, then you've got money to buy back in. Okay, this is all a challenge to our will. Okay, because we want to buy, we want to make money, but sometimes it's just hard to. Okay. So that's just the stock pick count. I'll probably be showing you a long-term picture of that in the Stockradar newsletter, which will come out this week, a couple of days late, because I have been on holidays in Queensland, having a great time, having a bit of a refresher. It'll come out early next week, and I'll probably show you this long-term stock pick count. Since probably 2003 I've been running it for. So that'll be an interesting one for those who want to look at the newsletter. Okay, so hope you see where I'm coming from today. It's not easy. There are three words that I'd probably use. Poise, we need poise, we need patience, and then we look for support. Now, that's all we really need to do at the moment, okay, because we can't do a lot else apart from a couple of stocks, as we say, like the coal stocks and some of the energy stocks. So this is where we start, support. Don't be reckless. No doubt it's a very difficult time in the market, and we certainly need to respect that, because the market teaches us an awful lot. Okay, there are many parts to my decision-making processes, but they can all be quantified, and by doing this, it will generate controlled outcomes, and this supports consistent trading results. Okay, so quantifying things, making them objective is a really, really important part of what I do. Okay, so stay safe, be careful out there, watch your trends, heed your stops, and I will see you all next week for more words of wisdom. Okay, thank you very much. See ya.